Howdy folks, welcome to the Daily Coin. My name is Rory and today is Wednesday, October the 9th, 2019, and I have the very distinct honor and great pleasure of welcoming a gentleman to the show for the first time. And we've just been having an incredible pre-interview conversation, and I wish I would have recorded it because you would have loved to have heard what he was sharing. It was awesome. But unfortunately, it is lost to history and between the two of us. And I'm referring to Nick Barisheff, and he is the president and CEO of BMG-Group. He is the author of the book $10,000 Gold and Why Gold's Inevitable Rise is the Investor's Safe Haven. BMG-Group is a member of the LBMA, and they are one of two Canadian companies, the other one being the Canadian Royal Mint, who produces the maple leafs, the coins and bars that we all know and love. And BMG-Group has several products in their portfolio of offerings, and the BMG Bullion Fund mutual fund that purchases equal dollar amounts of gold, silver, and platinum bullion, BMG Group Bullion Fund, the BMG Bullion Bars, BMG Silver Bullion Fund, all of which you can find out more about at bmg-group.com. Links to the book and links to the website will be in the description box below. Nick, I am so honored to have you on the show. Welcome to the Daily Coin.
Well, thank you for having me, Rory. My pleasure.
And I'm sincere about it. I wish I would have recorded that free interview because that was really some good stuff going on there. But I wanted to start with the Federal Reserve and the ECB, the European Central Bank, and it seems that these guys are once again, they're out of control. They're on the brink of massive fiat currency printing again. The Middle East continues to be a powder keg. We got the trade war between the U.S. and the rest of the world, basically, and a variety of other major issues around the world, seemingly continuing to keep the headlines filled with gold and silver-friendly items. The only news unfriendly towards gold is a slower start to the Indian festival season. What is your assessment for the remainder of 2019 for the gold and silver market?
Well, I think you're absolutely right from a central bank point of view. To keep it simple, the central banks of the world have two major tools in their ability to manipulate the markets, and that is the interest rates, and then what they're calling quantitative easing, which is like purchasing assets. So interest rates are, pretty much as low as they can get. Like if we have a move to recession, typically the central banks need to lower interest rates by at least 3% to try and get you out of the recession. But that obviously isn't possible without going into negative interest rates. So the only thing is what they euphemistically call quantitative easing, which is simply printing of money and buying assets. So they did that in 2008, and they now have a lot of assets that if they were to mark those assets to market, they could technically be insolvent. So they have those assets that they acquired in 2008, 2009 still on their books. And they're going to have to do it again. As one of the things, whether they buy stocks, bonds, that'll be the thing to print more money. And where you have the risk is not only will it lead to an inflation, but you could also have a stagflation where you've got no growth, but inflation at the same time, like we had in the early 70s.
So how do you see the remainder of the year? Do you see gold and silver remaining where they're at? Do you see the
I
what
see that.
influence do you see the money printing? Do you think that that's coming online at this point, or do you think that they're going to be able to hold off for a few more months and get into 2020, get into the full blown presidential election campaign season of 2020? Or do you think that the Federal Reserve is going to go ahead and weaponize even further the Federal Reserve note?
Well, that remains to be seen because it's hard to see whether the Fed, um, is on Trump's side or against him. The issue is if they're part of the deep state elite that want Trump out, um, they could very well cause a market collapse before the election, which would reduce Trump's chances of getting reelected. If they're more or less on the same page with Trump, they'll do everything possible to delay the market collapse till after the election. So that's the only question I have in my mind, and I don't have the inner workings in the government to know, which is it be. So that's what we'll have to monitor carefully and see what's going to happen. Is it going to be a market crash before or after the election? But the market crash is inevitable and it's very
Yes.
near. And even if the Fed wanted to prevent a market crash, they may not be able to. I've been in the business for 40 years, and this is the first time ever that been a simultaneous triple bubble in most Western countries. And the triple bubble is stocks, bonds, and real estate. And all that has to happen is any one of those pops, and the other two will come down with it. But the other problem that makes everything that much worse is the fact that there's 300 trillion in global debt, and the debt is at historic levels, whether it's government institutions, companies, or personal. So all these debt levels are at a height. So if any of these bubbles pop, you also have a debt crisis that could lead to a currency crisis. So we're on very touchy ground, and that's the issue. The one asset class that will preserve and save portfolios is precious metals, gold and silver.
And gold has now been reintroduced as a tier one asset, making it on par with all the currencies. And I'm a little, when that was announced a few months ago, that was a little suspect to me. But in an article you recently published titled Gold Price to Exceed $10,000 an Ounce, you make a very strong argument to support this number. And one of my favorite parts of the article is where you describe gold's purchasing power. And you can see the chart right there on the screen,
Right.
comparing 1971 to 2019. According
Right.
to this chart, gold is increasing its purchasing power. And as an informed audience knows and understands, fiat currencies are losing purchasing power. And according to your calculations, Nick, we will be able to purchase a car for about 3.5 ounces of gold. And I've been calling for gold for $1,700 plus by the end of 2020, and even higher all the way out to 2023. I mean, what kind of timelines are you working with as far as reaching this $10,000 gold?
Well, again, that's imminent because, like, if we just take one sector, because my other article talked about pension funds. When you look at pension funds, last year most pension funds have a 60-40 allocation of stocks and bonds, and they don't have any allocation to real estate or precious metals. So the portfolios aren't at all diversified. I've come to accept the fact that a lot of so-called experts and financial advisors have almost an irrational negative bias against gold. But what's their problem with real estate? Over the past 40 years, REITs have been the best performing asset class. Precious metals have been the second best, followed by stocks, bonds, and then cash. So if you want a diversified portfolio, you have a mix of all those asset classes. And the only debate is how much of each. But it's certainly not zero real estate and zero gold. The pension funds, according to the data I've seen, have less than 0.5% of their portfolio in gold globally. So the issue is that there's not much gold available for the pension funds. Like, we're dealing with a fairly substantial pension fund, but not a huge one in global terms. So it's just a Canadian pension fund. But if it was to allocate 5%, it would need to buy $8 billion worth of gold, just at 5%. So what's going to happen is the early adopters, from the point of view of pension funds, might be able to buy enough gold, and it's not going to be a matter of just writing a check. It'll be accumulation of the physical over a period of time. But the first ones in will be the only ones that will be able to get any. The smaller investors will always be able to buy a few coins at some price. But if you're a pension fund and you need to buy hundreds of thousands or billions of dollars, you better get going right now, because by the time it becomes obvious to everyone, you're not going to be able to buy it.
One of the things, and I've heard that 0.5% global allocation of investment dollars in the precious metals. I mean, it wouldn't even take another 0.5% to blow the markets apart. I mean, it would just blow them to shreds, obviously, if it were to increase by 0.5%. I mean, even 1/10 of 1% increase globally, that would be enough to shift the market, wouldn't it?
Well, exactly, and that's where when I wrote the book $10,000 Gold, I felt like a lone wolf in the wilderness, because no one was predicting $10,000, and reporters and everybody was asking me as if, are you serious about 10,000, and are you crazy or whatever? And the issue is that the argument for $10,000 gold is much stronger now, because things haven't improved. And the number is simply that all the newly printed money went into financial assets, primarily stocks and bonds. So we have 300 trillion in stocks and bonds in round numbers. Above ground bullion is 1.6 trillion. And so I'm talking about bullion. It doesn't count the jewelry, the central bank holdings, or the industrial supply. This is the investment grade bullion. Of that 1.6 trillion, what is not known is how much of that is held by the world's wealthiest families, like the Rothschilds. And no matter what the price is, they're not going to trade their gold for paper currency at any price. So they understand gold. So something less than 1.6 trillion, it would become available. But if you assume the entire 1.6 trillion was available to buy, and if 5% of 300 trillion decided to allocate to gold, that's 15 trillion trying to move into a market that's only 1.6 trillion, and if, say, half the gold is not for sale, then you got less than $1 trillion worth of gold and $15 trillion worth of trying to buy it. So the price has to go up 10 to 15 times for that to happen. So that's one kind of simple analogy. Jim Rickards has his analysis talking about anywhere from a low of $10,000 to possibly 50,000 an ounce. Pierre Lassonde, the founder of Franco-Nevada, he's saying eventually gold will go to 25,000 an ounce. So 10,000 an ounce now sounds conservative.
Yes, yes, it does in comparison to those two. And I'm not arguing. I mean, I've had my doubts about these very lofty numbers, but the more that I look at it, and the more that or the better the information that I get, I'm arriving at these very lofty numbers as well. Because if you take the 300 trillion that you were talking about in comparison to 1.8 trillion of gold, I mean, if you took 0.5% of the 300 trillion, bam, you're at the same number. You're at 1.5 trillion.
That's right.
So all of a sudden, nobody who's going to sell their gold for what they paid for it today? Nobody. That's not why they bought it.
That's right.
So good luck with that.
That's going to be the dilemma, particularly for the pension funds. And many of the pension funds have very large unfunded liabilities, and they've generated these unfunded liabilities during the biggest, longest running bull market in history. What's going to happen to those pension funds when the market corrects? Last year, the average pension fund with a 60-40 allocation lost 5.7%. Wow. How do you do that? I don't know.
Well, Craig Hemke over at TF Metals Report, he went back and looked at the previous crashes on the stock market for the last 25 years and found that there was an average of about 52% drop. And if you take an average of 52% from where the market is now, you would be somewhere in the neighborhood of 13 or 14,000 Dow Jones. Most people aren't going to be able to recover from that. And
that's right. But you see, what to go in a contrarian strategy, as I look at it, that although during a bull market you should stay invested and not try and trade, unless you've got a high level of skill as a technical trader. But for the ordinary person, just invest for the long term. But except when you're on the precipice and the edge of the cliff, okay, now's the time to take your money off the table and not be invested. And the best way to do that is to convert your money into gold for the time being. In every correction, gold has always gone up while the markets have tanked. So you would be sitting in gold, it would go up. When the markets finish their correction, then you go back and cherry pick assets at 50 to 70% discounts, and then rebuild your portfolio and have a truly diversified portfolio.
And you didn't lose anything.
The contrarian strategy that's against all the mainstream advice, but in terms of protecting, that's what you do now, because whatever the stock market, maybe it goes up 5%, maybe it goes up 10% if we have irrational exuberance, but maybe it declines 50 to 70%. And if it declines 50 to 70%, most investors will not live long enough to see break even.
I don't think it's going to come back when it crashes the next time. I don't think that we're going to see this rebound. Would you agree or disagree with that?
Well, that's hard to say. We could be like a Japan, but there's so many other influences and macro global conditions to predict what it is hard. So the thing is to be safe with your wealth preservation and stay alert and knowledgeable with alternative information like you have on your website, and keep making decisions as events unfold. I mean, we don't know, just from your point of view in the UK, what's going to happen with Brexit, and how is it going to affect the UK, Europe, and the rest of the world. Just one little thing in the back burner, but it's still a very big thing.
And that's coming up in 3 weeks.
Right. And things that all the major banks have now been charged with market manipulation and convicted. One is the in terms of the exchange rates that a handful of banks were involved with, and I think we're fined about $5 billion. Secondly, the LIBOR scandal that's going through the works. And now JP Morgan has been charged under RICO for manipulating the gold market. Now, that's not covered in the mainstream at all. But to be charged under RICO is normally reserved for criminal organizations. So the government is labeling JP Morgan as a criminal organization.
Well, they should, because that's what they are. I mean, they've already been fined on numerous occasions for drug money laundering. They've been fined on numerous occasions for market rigging in the LIBOR, the Forex, and who God only knows what else they've had going on.
In the past, that the fines were less than their profits, so that was just a cost of doing business.
Exactly.
In this case, there'll be people going to jail.
We can only hope. I mean, I hope and pray to God every day that somebody from these mafia type organizations, JP Morgan, HSBC, Citi, Wells Fargo, they're all criminal to the core, and people need to go to prison, period. Yeah. So, but my blood's starting to boil because, and I want to calm it down a little bit. And I want to, here in the last few minutes, Nick.
At least it's moving in the right direction, and we can keep our fingers crossed.
Yes.
And you see the issue of manipulation. Yeah, when I talked about it 10 years ago, it all seemed like conspiracy theory and so on. So it's clearly not conspiracy theories. The manipulation has been going on in most of the markets, and court cases have come about. Now, what hasn't come about is after the criminal case gets done, then what happens is it's a setup for a civil class action case by the investors that lost money because of their manipulation. So that'll be a multi-billion-dollar class action suit based on the results of the criminal action.
Now there were two that came out of the Canadian. I think it was Scotiabank, and there was one other bank that was 2 or 3 years ago that were found guilty of manipulating the market, and there were a couple of class action lawsuits. It didn't seem to change anything. Are you suggesting that with this situation with JP Morgan and the RICO charges that is in fact going to change things?
Well, because from a lawyer's perspective is that if you've got a conviction for a criminal act, it makes the civil lawsuit almost a slam dunk.
Okay. So, but there was, like I said, there was that class action lawsuit, or am I misremembering that? Am I not?
There's been several class actions suits, but you see, they were all civil lawsuits with
Okay.
no criminal conviction ahead of them. So they had to argue, that the whole manipulation. If you have a finding of guilt for criminal manipulation, then a civil lawsuit becomes pretty straightforward.
Gotcha. Okay, so it does. It changes everything.
Of all the precious metals investors that lost money because of the manipulation, which would be mining companies, hedge funds, mutual funds, individual investors. So it'd be like a multi-billion-dollar lawsuit, and some lawyer is going to get very rich.
And this could bleed into the other organizations that I listed, like HSBC and Citi,
Right.
Wells Fargo, all of those, RBS. I mean, all of them, because they're all.
One of the things that shows up is that up until 2011, the gold price and U.S. debt, if you were to chart them, were almost perfectly correlated. Okay. And it makes sense, like the price of gold and U.S. debt, that they should be correlated. But in 2011, the correlation diverged and the gold price went down, but the U.S. debt kept climbing. Now, if this was to revert to the mean and get back to the correlation, the gold price today should be $2,200 an ounce.
Okay. I would think it would be a little bit higher. Actually, I think it would be a lot higher than that.
Yeah, because it's hard to keep up with what the actual U.S. debt really is. But
yeah, because they lie so much about it. I mean, you've got all the off-book Social Security, Medicare, Medicaid, all of the things that are not part of the deficit number that we're fed. It's not part of that $21-22 trillion.
Oh, that number is closer to 120 trillion.
Yes, right, and so if you I would think that based on that 120, that gold would be a lot higher. Or am I wrong?
No, that's right, and the only reason it's not is because of the various forms of manipulation. So
right, and one of the arguments is that gold will continue to be suppressed because governments around the world can't allow it to reflect what the reality is. Because, I mean, James Turk taught me years ago that, one of its main purposes is to measure the health of the economy, and the higher that the gold price goes, the sicker the economy is. There's a direct correlation between those two. And governments around the world probably aren't going to allow that to happen. Or, I mean, do you see China, Russia, and their economic alliances? How do you see them impacting what's going on?
Right now, there's two major countries that have a vested interest to keep the price down. One is the U.S., and the reason is because gold is kind of the anti-U.S. dollar.
Exactly.
So to have faith in the U.S. dollar, you don't want gold going at 10,000 an ounce. That becomes a non-confidence vote in the U.S. dollar. But the second major player is China, because China is accumulating gold through their sovereign wealth fund, not their central bank.
Right.
And their intent is to have more gold than the U.S. has, assuming the U.S. has the the purported amounts. The U.S. purports to have 8,000 tons. China officially has 1,600 tons, but no one knows how much the Sovereign Wealth Fund has. Many estimates is that they have about 4,000 to 5,000 tons already in the Sovereign Wealth Fund. So it's in China's best interest to keep the gold price down while they're accumulating to get to the point where they have more than 8,000 tons. So they have a vested interest to keep the price down. Russia's in the same boat. Russia's accumulating actually faster than China on a GDP basis, and they're the, I think, second or third largest producer of gold, and they're keeping all the production is bought by the central bank. So both Russia and China are accumulating vast amounts, as are a lot of Eastern European banks, Middle Eastern banks, Asian banks. They're all accumulating gold. So central bank accumulation in 2019 is all at record highs. So they see something coming down the pipe for all of these central banks to be accumulating gold like never before.
Yeah, and isn't it kind of a tale, Nick, that we have countries like Poland and Hungary in particular that got back in the gold market last year and kind of hung around this year also in both 2018 and 19. And they haven't been in the market in years and years and years, in some cases decades. I mean,
that's right.
That should be screaming at every investor around the world that something's wrong. Something, not only is something wrong, but something is right as well. And with Russia, which you mentioned them being I think you're right. I think they are second largest gold producer in the world currently. It might be third, but South Africa has such massive issues with their government at this point. I think they've about destroyed the mining industry down there. But anyway, Russia now has their balance sheet, their national balance sheet is actually in the black. And they have 20. I'm sorry.
Has a very low debt to GDP ratio.
Who is that?
In the world. So they're kind of in good shape for what could be a major financial crisis in the West.
Yes.
And Russia's sitting there with very low debt, and percentage-wise, a lot of gold.
And it was just announced. I've read a couple of reports. I think I reported on it myself. I go through so much information in a day. It's mind-boggling. But I think that they just reported that their gold allocations on their reserve of their foreign exchange reserves is right at 21% of their overall reserve. I mean, that's unheard of.
Yeah.
No one else has that.
That's right.
So, I mean, doesn't in a way, Nick, doesn't that kind of put them at the top of the list? Because doesn't that show that their economy is the strongest by far? Because no one else is in the black.
Except that on a GDP basis, the Russian economy is about 10% of the U.S. economy.
Okay.
Chinese economy. So these numbers are good, but as an economy on the whole, it's very small compared to, say, China and the U.S.
I mean, not that I'm going to move to Russia, but it sounds like they have things that are working a lot better than most, even though their economy is small. I mean,
that's right.
I'd rather be in a small economy that's thriving and growing than in a large economy that's, kind of rotten.
and most of the Russian people seem to be supportive of Putin because he does what's good for the people.
Yes, he
In,
loves the
in
people.
the U.S., you've got the country totally split on this kind of Trump derangement syndrome.
Yes, it's ripping our country to shreds, unfortunately.
Yeah.
But Nick, I'm really grateful to have spent some time with you this afternoon. I didn't get to all the questions. I didn't get to hardly any of the questions that I'd prepared, but that's okay. It's just been an incredible conversation, and I really hope that we can do it again in the not too distant future, because I would love to get your thoughts on as everything continues to unfold.
Sure, I'd be pleased to do that whenever you like, Rory. And the other thing for your readers, we've recently made an audio version of the $10,000 Gold Book.
Cool.
So it's available on our site. It's available on Amazon as well as many of the audio book sites. So it becomes a lot easier to listen to while you're driving in the car than it is, having the time to read my whole book. But the book was intended to give people a good background on money and gold and history, so they have a complete understanding of that. And we've had very good response on the audio. So if you haven't got a copy, I'll send you a copy. And like I say, the audio book's available either from our website or Amazon. They have that Kindle version of the book as well as the audio version and the hard copy.
Okay. Well, I'll put links to all that in the description box below, and link back to the site also. And because you guys have some things that I believe that the audience would be interested in. They should be if they're not. I mean, because what you are offering is what we talk about all day long at the Daily Coin. I mean, it is wealth protection and getting out of the way of these central banks and their reckless policies, because they do not have our best interest at heart. I mean, and they just don't. They don't care about you and I, and we have to take care of ourselves. That's the bottom line. So
that's right.
But Nick, I certainly appreciate it, and I look forward to speaking with you in the not too distant future.
Okay, my pleasure. And any time, I'd be more than pleased to have another interview.
Thank you so much.
Okay. Thank you, Rory.